Hey everyone, welcome to the show today. I'm Darcy Ungaro, and today I'm catching up with Rupert Carlyon from Koura, KiwiSaver, and Mark Fowler, Head of Investments with Hobson Wealth. Little bit of an unusual one. We're covering things like the Air New Zealand rights issue recently that we saw. How did that all work out? And also we're talking about Elon Musk and his, share purchase of Twitter and maybe his eventual takeover plans. Who knows? Finally, we're finishing up our conversation around this inequality beast, this rising separation between the haves and the have-nots. Who is really to blame for this? Hope you enjoy this one. And remember, not financial advice.
I've even seen communication from, as I say, from some credible shops that haven't even got the details correct. So look, it's been a real shame, to be honest.
But is that kind of just highlighting the fact that, hey, with the rise of the retail investor and the frequency by which these rights issues come up, it obviously highlights an issue that investor education is extremely important. And like what you were saying, Rupert, what we're seeing now is so much more than what we would have seen in the past. So that's pretty cool to see that pick up, where there is an opportunity for everyday investors to get more education. But does this kind of highlight the risks to retail investors here that, hey, if you don't actually understand how this works, there's possibly a higher probability that you could lose money by owning shares directly? Do you think it might actually shake the confidence of some of these direct shareholders out a little bit?
Yeah, I think that's a really good point, Darcy. And I think one of the Air New Zealand's really highlighted that is that also even pre this rights issue, a lot of the institutional research or KiwiSaver providers and that they weren't really that big on Air New Zealand because they saw a lot of the headwinds in the industry and basically all that sort of share price appreciation over the last couple of years has really been driven by just sort of momentum retail demand. And I think not really an understanding of how precarious a position Air New Zealand were in terms of their balance sheet and those sorts of things. So I think you're right, Darcy. I think that it's sort of shown that a lot of people thought, hey, look, it's our national carrier, there's government ownership, and there's some real merit to that, but maybe not fully understanding just the size of the recapitalisation that they've needed to do. And to be honest, that's been well flagged. That's not a new thing. Yeah. Hey, suddenly they need to sort of recapitalise. That's been coming for some time. And it was really until they got some clarity around the sort of the COVID situation. So I think maybe retail investors have been caught up in the momentum of the name without maybe really fully understanding what was required to happen.
But I also think here, this was a story of people buying in low, people very proud to have got in at 80 cents kind of during the COVID crash, continuing to buy with a very firm view. A lot of the stuff I look at on the Facebook groups, Air New Zealand's cheap. It was trading at $2.80. It's now trading at $1.20. It has to go back to that level. Not kind of understanding the impacts of dilution and understanding that actually you're investing in a very, very different company, and a $2.80 share price actually means you, because of kind of the extra debt that the business has taken on, because of the extra shares that have been issued, that's almost kind of you need 3 times as many earnings as they previously had to hit that same share price. And is that realistic or not? I don't know. But I think this is a great example of, it was a very simplistic argument of why you should buy it. And it's one of those where you've had a very different set of answers between institutions and retail. But I find this one a really interesting one. So I'll be curious to see where this one comes out as well.
To completely change tack, but stay on the same vein of Air New Zealand for a second here, just having a look at a couple of headlines, where this headline in particular, I found this quite interesting, really interesting. Finance Minister Grant Robertson, confident people will see Air New Zealand as a good investment. And what I find quite fascinating, sounds like you know where I'm going here, is this bit right here. And this is a quote directly from the former FMA CEO, the Financial Markets Authority CEO, Rob Everett, the former one. And he said, when you start getting into recommending particular products like specific funds or stocks or insurance or telling individuals what to do, that's probably regulated financial advice. And my words, you'd be best to stay away from it. So what do you think here? Do you think Mr. Grant Robertson, keeping in mind that 51% shareholder is the Crown, or us via the Crown, you think he's stepping and crossing a bit of a line here in offering regulated financial advice? What do you guys think?
Oh, I think I'm staggered that he actually came out and said that, let alone the conflict of interest. I mean, as you say, the majority owner of that is the government. I'd like to be interested to know how much of a deep dive Grant's done on the balance sheet and those sorts of things and future earnings. Look, I'm being a bit facetious, but look, I do think it's quite staggering. And talk about sort of government creep. And look, I think they should have a much better understanding of who's listening. As you say, that the sort of large retail base that Air New Zealand has, I'm mystified, to be honest, as to how he thought it was a good idea to come out.
Look, I think there's two sides to it. My view would be, as a politician, no way, because he's got the ability to influence people and kind of in a very different world. But look, is it financial advice? My argument would be no. Every time these capital raises happen, we see company directors, company CEOs, we see majority shareholders coming out and saying this kind of stuff, right? Fundamentally, they're putting their money in, so therefore they believe it's going to be a good investment, so therefore they want people to follow. So I think from a majority 51% shareholder perspective, I don't think it's that out of line, and it's not something that I would people would do it, and people do it very often. But as a finance minister, it's just insane, right? Because theoretically, what do you go?
Yeah.
You take this as meaning, does this actually mean that the government's going to kind of continue to support and continue to step in? And if the earnings aren't going to hit the numbers that the share price needs, is the government just going to throw some more subsidies or something at it? I mean, that's one way of interpreting what's been said here.
To me, it kind of feels like at best, it's a conflict of interest. At worst, it's regulated financial advice. But I interrupted you, Mark. Go ahead.
No, but I think Rupert makes a really good point around sort of making a rod for their own back. Is if let's just say that we get a re-emergence of another variant and we have the same pressures that we've seen in that industry the next couple of years. I mean, the cash burn in Air New Zealand currently, off the top of my head, is sort of well over $100 million a month as we stand. What happens if they need to come back to the market in 12, 18 months' time? Grant Robertson's told everyone it's going to be a good investment. How could they come back and say, hey, we're not going to support the airline? So yeah, look, I think that there's just a myriad of issues there. But I think Rupert makes a really good point. I mean, that conflict seems pretty large.
I mean, the other one that I find slightly more interesting, equally interesting, if we want to get political, I think it was back in the early 2010s, John Key came out saying he saw good reasons why the New Zealand dollar would go from 70 cents to 80 and potentially higher. And I think it might have been Grant Robertson who sat there and kind of said, this is insane that a politician would speculate on the financial markets and give people guidance.
That's crazy. From my perspective, it just feels kind of like a little bit rich when you're confronted with two sets of rules. People at the top get to do what they want to do. All us other plebs, us everyday people, we're kind of stuck following the rules that these guys set. I know it's a little bit cynical, but it just smacks of that. You know what I mean?
Well, the front page on The Guardian this morning was the laws in the government in the UK are not meant to be followed, where you've got the Conservative ministers basically sitting there kind of blatantly ignoring the rules, ignoring the laws, and at the same time saying they think they're nuts, so why should they have to obey them? So We're not the only country where the rule of law is kind of only for those that aren't able to argue the way out of it.
And on that topic, I guess, of just talking about the world's elite and us regular people, maybe we could shift on over the discussion, because one of the things I wanted to do was just really pick up the conversation that we started the last time we spoke, News in the Money World. We were talking primarily around interest rates. And my goal at the time, and I was being way too ambitious, was to have a chat about interest rates, a chat about Air New Zealand, and then a chat about Elon Musk moving into Twitter land. So let's talk about that. What do you think is going on here? Like this, it's a really fascinating story with Elon Musk kind of buying a chunk of Twitter and the disruption, no doubt, that he is going to have, a cat amongst the pigeons, if you like.
Yeah, I mean, it does seem to be, as you say, it seems to be quite a polarizing figure. Some of the stuff you read around the stake in Twitter is all around sort of controlling the narrative. So, talking about getting your message across and those sorts of things. But he has, and as you say, I can remember going on Saturday Night Live and sort of sending up crypto. And even though Tesla had a significant holding in sort of cryptocurrency, which is kind of at odds with, trying to defend your position as a shareholder. So, like, he is, but he just seems to, as you say, different rules for this guy. He doesn't mind coming out and sort of publicly challenging people. and it can be very divisive. But I think one thing it does show is, he's certainly no fool, and my sense is he must see something in that platform that he thinks that he likes, or a narrative that he can change. And,
or does he?
Well,
so I'd be slightly more controversial, right?
Yeah. Do you think it's just a stunt, or?
No, I think he's a futurist, right? There's no question. He's done an exceptional job at building future-focused businesses.
Yeah.
And in the old world, once you got really rich, what did you go and do? You went and bought a media company.
Right.
So you, Bezos, Washington Post, you go, Berkshire Hathaway even, he's kind of bought a string of newspapers. Rich people for forever and ever have been going and buying newspapers. So what does a futurist do?
Is that to control the narrative, though?
Exactly. And so what does a futurist do rather than buy a newspaper? You just go and buy yourself a social media company.
Interesting.
And so for me, it's all about how does he use this to kind of transform the narrative, transform the message, and actually really reshape kind of a lot of what's happening. Because I think for people like him, you would be petrified to a certain extent, right? Because he's got a 60 million followers and he is a large part of what that platform has become. But so is Donald Trump, and they've managed to boot him off. And I think as media rules and as these companies kind of go further and further down, the kind of, if they ever can become responsible, but if they were to do that, a lot of what people like him are doing becomes really, really hard. And so I reckon this is purely defending his version of free speech.
Yeah, and it'll be interesting to see what his next move is, because I think he's taken about a 9% stake, and sort of less than 10% you sort of still consider passive. And maybe a seat on the board, but ultimately, how much influence can he have at that level of shareholding? So, yeah, I think what will be fascinating over the coming months is there a real commitment to that? To Rupert's point, is this a media play for him to enhance, his own sort of profile? Not really enhancing his profile, but enhancing his message, I suppose, is a better way to phrase it. So, yeah, it'll be interesting to see how that evolves.
But the passive one's kind of fascinating, right? He filed the filing saying he was a passive investor, wasn't going to be doing much. 2 days later, the poll on Twitter was, do we need to change the format of the retweet or something? I can't remember exactly what it was, but it was, he's already turned himself into the product manager for Twitter as well.
Yeah. Actually, do you want to break down what that means, though, just to be a passive shareholder? Because he's obviously the largest shareholder in Twitter now. But what does it mean to be a passive shareholder in this context?
Basically, an active shareholder would normally mean they will try and encourage change in the business. So that means they might nominate directors to the board, whether that be Elon or whether that be one of his representatives. But fundamentally, they are there to do something and try and make change or do something different, right? A passive shareholder will come in and they're kind of saying, hey, look, we like the business, we like management, we like the way things are going. And we're just going to kind of sit there and we're along for the ride. We're there for the earnings stream, but we're not going to be activist and we're not going to drive a huge amount of change. So I think given what everyone knows about Elon and how he operates, the filing and what he filed was probably very different to how he's ever behaved in the past.
I think it's like what you were saying before around trying to control the narrative. It's his version of free speech that he's trying to hang on to. Like that totally makes sense at a level, but it is hard to kind of predict what his true motivation is. It could be money, possibly, right? Like he could have a real greed problem, right? Maybe it's money. I kind of doubt it, though. It almost feels like he's already ticked that off the list, and now it's all about mission. This is all about his mission, but what is his mission in doing this?
But because it can't be about the money, though, is it? I mean, what's he worth? $300 billion, and this is like a $2 or $3 billion acquisition, and he's basically got. I mean, and that's where it gets really interesting, right? Because fundamentally for him, it's basically half a day's Tesla stock price change to just take the whole thing private.
Yeah, look, exactly. So, and that's what I sort of made the comment. The next few months will be interesting because, what are really his motivations? We're obviously speculating. It does sort of seem a strange move if he's just going to sit there and be passive and almost say, "Hey, I'm taking a silent ownership stake." But maybe he likes the trajectory of the business. But I think it seems doubtful.
Well, slightly controversially, what do you think around the rest of the tech barons having a go? Right, so you go Microsoft. I mean, it makes quite a lot of sense, right, for Microsoft to kind of plug this into LinkedIn and being able to kind of grow that social media presence. They had to go TikTok last year. They were outbid on TikTok. Oracle again outbid on, or I think they were the winners on the auction, but then Trump left, so therefore they didn't need to do the divestment anymore. I mean, just thinking out loud, is this potentially kind of a slightly defensive play to stop one of, because it is the only one of these social media platforms that is available, that has a free float that someone can come in and control. Facebook, 50% controlled by Mark Zuckerberg. Amazon, well, that's kind of the retail piece. But yeah, and Google kind of controlled by the two founding shareholders as well. So I just wonder, is that going through his mind? And that was only a matter of time before one of those big guys came across and went, we need this. And then that would really cause him problems because they'd shut him down straight away.
Yeah. Oh, look, I think more and more it has to be a strategic holding. I just don't buy into the fact he's sitting there. So I think those things, and as I say, we're speculating, but it does sort of feel as though there is some strategic thought to this, and there's a reasoning for that. And that, to my mind, controlling the message, as you say, protecting, I think makes more sense as to why he is there. Otherwise, it's just hard to make sense of.
Yeah, and it gives us a bit of a glimpse as some of the positioning and the strategy even of some of these tech giants or these populist CEOs, if you like, that are maneuvering, Trump trying to make his own social media channel, Zion, a Bitcoin protocol sort of social media platform. There's obviously this effort and there's almost like a battle happening to gain control over our attention or the narrative. And because he's quite different, like Elon Musk feels and sounds and acts very different to, say, Larry Ellison or Bill Gates or some of the other giants out there, right? So it just makes me wonder what's the play here? Like, are they planning something bigger? Like, obviously controlling the message, controlling social media is really important, but to what end? Would you guys want to speculate there?
Yeah, I think it does. And look, maybe we're overthinking it, but my sense is there's got to be something larger at play. But it is difficult to identify what that is. I mean, I think, as say Rupert made that point earlier around, maybe he does want to build sort of a modern day media empire, to sit along, Tesla and these sorts of things. But I don't know. To me, it's difficult to sort of really work out at this stage, other than just having that control. And having said that, can you control at 9%? I don't think you can. You know what I mean? I think it's not. He hasn't gone in and taken over Twitter. So I think we've sort of got to watch the space.
I reckon 9%. It's pretty easy to get to 15, 20 plus your 60 million Twitter followers. You'd sway a director vote pretty quickly with that.
Well, I think logically that feels like what would be the progression.
The 15 to 20, but yeah, I mean, it is quite scary though, right? When you kind of, if you want a deep speculation on your question, Darcy, because we know he hates regulation. We know he hates kind of anything that stands in his way. And actually, this is the platform and this is the way that he can just bulldoze things through, right? So you imagine, I mean, the delay, the kind of the stuff around the worker rights in the US where he has been unwilling to let Tesla employees go anywhere near a union. The water issues around the Berlin Tesla factory. There are just so many things and so many issues where he has used the popularity of himself and of Tesla to railroad through quite controversial decisions. And I think a platform like this just gives him more power to probably do that if I'm going to be skeptical and slightly nervous about the whole thing.
Yeah, and what I would add to that is, I mean, some of the power that these sort of celebrity type things are huge around markets. I remember, and sort of correctly, I can't remember quite the exact detail, but I remember someone like Kylie Jenner coming out on Snapchat and she made some comment. It was almost a throwaway comment around, I can't quite remember what the product was off the top of my head. But it took it wiped sort of 15% off the stock intraday, just kind of so I guess with those platforms comes a lot of power. And, again, being a bit sort of, maybe thinking it too much, but maybe that's also a platform to derail other competitors or other businesses. Those things, So, yeah, the power of celebrity and their influence now across those channels is so
totally
enormous that they can move
Yeah.
markets, literally.
Yeah. Well, the responsibility that I feel, right? Just having this podcast, I'm immensely powerful in what I say. I can move the price of gold just by talking about
That's
it.
why we're petrified of you, Darcy.
That's right.
We're scared of you.
Yeah, but what I find ironic though about the character like Elon Musk, which seems to be kind of like if I had a picture of Milton Friedman on my wall, I'd probably have Elon Musk right next to him. You know, it's every libertarian's dream to follow a god like that. But what I find ironic is that they kind of champion free speech, or they say they do, or at least they genuinely do at this stage. They champion decentralization, as evidenced by promoting Bitcoin and Dogecoin, specifically with Elon Musk. Yet the other people in positions of authority similar to him are more about centralization and more about control. And so that's what I find kind of ironic, is that he's playing a similar game to those other people, or they're playing similar games, but I guess the operating system that he uses is a little bit different. His values might be a little bit different. I wonder if those values will change over time as his influence grows and maybe he gets drunk on the power perhaps. But I don't know. Daily, I kind of wonder if he's a genius, and he's going to liberate us all from the evil tyrants of this world. And then other days, I think he's the Antichrist. I just don't know where he sits. What are your thoughts?
I think that sort of really sort of sums it up, certainly from my point of view. And that's why I think we're sort of debating around this move in general. Is it's really hard to read the guy. You can't quite work out, where he lies on a lot of issues. And as you say, he's very nonconformist. He comes out and makes these outrageous statements, and even statements where you think, hey, that's actually going to hurt him. As I said earlier, around with the Dogecoin, Tesla had a material holding in crypto. So it didn't actually make any sense. Why would you come out and sort of? But it's almost the money doesn't matter, right? To your point. So I don't think he's into Twitter because of the money play. I think it's more just getting his message across. Being controversial, being nonconformist. I think this is what this play is about.
Yeah, I mean, the one thing we all have to agree on, though, operationally, he is a genius. He has managed to pull off things that kind of every single person in the world said were impossible. That what he did with Tesla, how he managed to get that thing up and running and then actually operating profitably, what he's done with SpaceX. So it's kind of interesting, right? He is clearly a genius. He is clearly exceptional at building and managing businesses. But yeah, so I think the power is kind of getting to the reputation, all of that stuff is kind of getting to him, right? Even the stuff that's a little bit nuts when you think about how he's living in a trailer in the middle of Texas just so he can be next to his plant, next to his factory, and you kind of go, like, I guess why? That's just PR, right? It has to be. There is no real reason why.
He could be the reincarnation of Howard Hughes. That's kind of what it sounds like, right?
Oh, that didn't end well for Howard Hughes, though.
That's right. Well, it's interesting, right? Like, I think it's just a fascinating story, and I don't know how to segue this in maybe to the next part of what I wanted to talk about with you guys, but we're in a really interesting time, right? We've got a war happening in Eastern Europe, Ukraine. It looks like it could either be, I guess, the beginning of something far scarier, or hopefully, fingers crossed, maybe it's the crescendo and it kind of peters off from here. I don't know. Again, I oscillate daily on which way it could go from here. But that's playing out. We have supply chain shortages, and potentially we're looking at severe food shortages and energy shortages and fertilizer shortages. It's pretty dark times. And sometimes I wonder if we are making too much of a big deal about that and kind of focusing on the negative too much. And then other times I feel like we haven't really appreciated yet the magnitude of what might be coming next. I know this is a really tricky and scary one probably to ask for all of us really in the positions that we're in, but do you have any perspectives on which way from here or where to from here?
Yeah, I mean, I think if I think about it in a domestic context, I think I've probably been reasonably outspoken around the fact that I think, I don't necessarily see a huge recessionary environment coming in New Zealand as an example. But I am concerned around, I guess, just that almost a sort of inequality gap and just really that sort of the pressure that's going on certain sectors and certain households, I think is really becoming, something that we haven't seen for a very long time. And I think that's a really difficult thing to weigh against. Certain parts of the sectors are going really well, and you've got tight labour market. You've got a reopening story, hopefully in the next sort of 12, 18 months, all things sort of touch wood. So there's enough positive sort of catalysts there to suggest that, hey, the economy is still going pretty well, although the government has had to sort of underwrite us over the last 2 years. Net debt to GDP from a balance sheet point of view in New Zealand is still good when you look to global peers. So there's enough positive stuff happening there where I think the economy can sort of continue to tick along. But I think it really is a fine line between really balancing, as you said, Darcy, around those just increasing costs, inflationary pressure, servicing costs going up on your mortgage. I think central banks have got a really key role to play. If they go too aggressive with interest rate hikes, I just think we could see a sort of tip over. And I'd sort of overlay that sort of globally as well. You look what's happening in the US now. Earnings season in the US has actually been pretty positive. Again, they've got a tight labour market. And they seem to be quite considerably ahead of us around the sort of COVID recovery. So if you looked at that in isolation, you'd actually suggest that, hey, there's reason to be optimistic. But again, it's just the structural shift higher in interest rates that we haven't seen for over a decade. And, is that going to be too much for at some point, which, sort of tips us into a sort of recessionary type environment? And so that, I think, is what everyone's juggling with at the moment. I probably still lean on the side of being slightly more positive. I do think, central banks can pause, right? If they can see that's happening, they can stop, pause, not continue to sort of raise that pressure on businesses and households. So I guess I'm probably sort of half glass full. I think there's enough there for economies, reopening. And I know I sort of haven't sort of touched on the situation in Ukraine, but just, I guess, more generally, I feel as though there is some optimism out the next sort of 12, 18 months.
What about you, Rupert?
Look, I think fundamentally people like us, we focus on markets, right? And we forget about the humanitarian stuff very often. And I kind of wholeheartedly agree with where Mark's going on the economics. And I think he's right. I think whilst we wake up every day to some pretty horrendous headlines in the newspapers around what's happening in Ukraine, what's happening in the world, I think fundamentally, unfortunately, countries like New Zealand, China, the US, which are very much kind of have their own economies, not reliant on so much of those commodities coming out of out of Russia. I think we're going to find that we are relatively insulated from all of the Ukraine and all of that stuff. It's actually going to be the lower income countries in those worlds which will really struggle through this. The food shortages and the fuel kind of shortages and oil prices, that's going to be impacting countries in Africa, the Middle East, those countries which kind of wheat and oil make up such big components of people's everyday lives. And I think as financial markets people, we forget about that because I'll be really brutal, they don't really matter for the global economy. And so we focus on what's happening in the US, we focus on what's happening in Europe, we focus on what's happening in China. And that's kind of why we kind of forget. So I think humanitarian-wise, what's happening is pretty horrible, and it will lead to poverty in a number of countries that kind of we probably just will never hear about. And then one of the big fears is further revolution in the Middle East because food shortages and fuel shortages, that's what caused the crisis in 2010, 2011. And so that's kind of where we're coming back to. The other big concern is really around, are we moving into a polarized world where we have a kind of a new kind of Cold War, East versus West? I think in New Zealand, I'll be honest, we're probably largely insulated from a lot of the political thinking. You talk to a lot of people in the US, even not so much Europe, but definitely the US, they would argue we've already been there for the better part of the last kind of 5-6 years, ever since kind of Trump was elected. It's kind of unanimous now in Washington that China is bad. It's unanimous that it's kind of one of the big risks that we have here is if China is seen to be supporting Russia in any which way, Washington are just looking for any possible excuse to slam sanctions and harm the Chinese economy. So I think, if anything, it's a flare-up. It is what it is, but I just see this as kind of, it's the live example of really what's been happening for the better part of the last kind of 5 or 6 years and probably since Trump came into power, really.
Going back to that inequality remark that you made before, Mark, I think it's an interesting time and season that we're in where it's absolutely not at all fair, but those with assets, those with pre-existing wealth will actually be propelled potentially a lot higher, and those without, what little they have, potentially they lose it. And like I was reading something last night talking about if there was just a minor exchange of nuclear weapons between India and Pakistan, the cloud it would create would potentially spur on a worldwide famine that could kill 1 to 2 billion people. So how's that for a nice, lovely article to go to sleep with, right? But like that's serious stuff. And what I think you said, Rupert, it's often the people that don't matter financially that get hurt the most. And again, it's just that inequality piece stirring out. So I'm going to ask you another really dangerous question. How responsible do you think central banks around the world are for exacerbating the inequality piece with their monetary policy settings at the moment?
Yeah, I mean, I think they've had a huge role to play, and I think the difficulty is, we've had a really, as I say, since post GFC, so well over a decade now. You've had this this idea for central banks don't want to see sort of financial markets or property markets or anything like that come back. It's almost like they didn't even want to see an economic cycle. So if you think, typically a cycle would look like, right towards the end of, say, an interest rate cycle, often people have over leveraged, whether it's businesses or households, and you saw mortgagee sales and those sorts of things. And what we would deem an economic cycle, and businesses would fail. Hopefully only a very small proportion of that. But now it's almost a case of, hey, that can't happen, right? So everyone gets supported on every level. And when I say everyone, I mean everyone with sort of assets, right? So, you've just been paid to be there. It doesn't matter whether you've been in equities, bonds, property, art. It doesn't matter what you've owned. It's all appreciated in value because of central bank's commitment ultimately just for no volatility. And so we've seen everything grind down to zero, which has been totally supportive of assets. And now that we're starting to see a little bit of a structural shift, I guess you've got people like myself and Rupert going, hang on, what's going on here?
Yeah.
We haven't seen this before. But I think, unfortunately, what that's done is we've created, as you said, Darcy, haves and the have-nots. So people who've had assets and who've had wealth over that time, that is now fully entrenched. And now, as interest rates go higher, people without assets are getting hurt, right? So all their costs are going, all their, just say, petrol, food, all those sorts of things. And with no asset backing whatsoever, it's incredibly difficult. And unfortunately, I'm not sure how they can unwind that. We've had a decade of this now that's been propped up by that. And I'm not sure they can. And look, this is their first
like
attempt.
Japan, right?
Yeah, exactly. To do
20
it
years later.
Yeah. And look, my personal view is that the world has become a sort of global Japan. I think we're in this period now where central banks think they can hike interest rates because of inflation, but we kind of know what the inflation has come from. It's kind of been artificially created, in my view. When that normalizes and suddenly people can't, service their debt at these kind of interest rate levels, or so I think, I think we've created a global Japan, if you like, and it's going to be really, really difficult to unwind.
I agree with 100% the global Japan. My challenge to that, though, is I'm not sure central banks had a massive choice there. I like that there is what was the alternative case for them. Fundamentally, what probably needed to happen post 2008, 2009 was a reform of the economies. And so politicians have not had the will to actually make the tough decisions and make the reforms that were necessary to drive productivity, drive real growth. And so, I 100% agree that the outcomes and what central bank actions have led is far from ideal, and it's probably got the potential to cause the next revolution. But they did it in a vacuum where politicians were unwilling to do what they needed to do, and politicians haven't been willing to act either. And so, to me, I can't quite see what the counter case is.
The point that you just made there, Rupert, I think is really important. Like, the politicians perhaps had a job to do, perhaps they didn't rise to the occasion, and perhaps they looked to the central banks a little bit too much. And now we're looking to the central banks wondering, and we're being critical of whether they should or they shouldn't have, but maybe we gave them too much power. What do you think?
But the governments also took exactly the same policy as the central banks. Fundamentally, fiscal stimulus was seen to be the policy. Let's not talk about reform. Let's not talk about labour market reform. Let's not talk about planning reform. Let's not talk about education. Let's not talk about anything hard. Let's just throw money at the problem. And I think Japan has been a great example of that, where you've got an economy that kind of since the late 90s hasn't really grown, hasn't really done a huge amount, but it's all been based on the zero money. Every single Western commentator for that 25 years has talked about the reforms that have needed to happen to liberate that economy and allow it to modernise. But they haven't been able to do it politically, and now the Western politicians and economists are unwilling and able to look in the mirror and go, hold on a sec, maybe we're just the same.
Cool. So on that, have either one of you ever read this book, Princes of the Yen by Richard Werner?
No, I can't say I have, Darcy.
He's written a fantastic book around this, and I must confess, I've only ever read snippets of it. I've yet to read the whole thing from start to finish, but maybe it's inevitable that we're all going to go through a period of time of some version of stagflation, I guess. Would that be a fair call?
I think so. And look, it's been unusual too around just, the level of inflation, right? This idea of inflation without growth. But, just to have inflation running at 7% annualized, which is happening in the US, I guess there's reasons that we can point to. But as I think Rupert said in a previous podcast, it's difficult to say it's transitory now, right? It really does feel entrenched. Maybe not entrenched at 7%, but certainly entrenched at a much higher level than we've seen. And I think, that's really difficult. And if you don't have the growth, you don't have the wage inflation to offset that, then that's a really difficult environment for central banks, right? Because they can't be seen as sitting on their hands. We've got this inflationary pressure. And you overlay that with the property market. And look, they'd argue, they've had the response they wanted. As I said, auction clearance rates in Auckland are down at about 30% at the moment. They were at 80%. So they'd argue that they've engineered what they needed to engineer, but can they engineer a soft landing? What I mean by that is, will they go too far and tip us over? And I think that's what everyone's really concerned about at the moment, is this idea that normally in a tightening cycle, you've got this real momentum in the economy. Everyone feels like they've got more money in their pocket, and it's, you're trying to rein people in, right? Whereas this doesn't feel like that to me anyway. It feels as though, hey, they're raising interest rates because they know there's all these costs and the property market was escalating out of control. But really, that's kind of it. You know what I mean? And actually, in some sectors, they're going backwards. Yeah, as I said, in New Zealand, are raising $2.2 billion this week. So it's quite extraordinary when you think of it in that context.
Yeah, but the housing market's actually a great example of what I was talking about as well, right? Where central banks have been left to fix the problem. Yes. Whereas actually that is 100% a government problem.
Oh,
and they've tried, and to give them credit, they have tried. They've failed, but again, I kind of go, actually, that is not central banks' fault problem. The central bank should not be setting interest rates to fix housing market. Central government should be adjusting planning rules, figuring out, helping people sort out supply chains, figuring out labour, all of that kind of stuff to solve that. But we're just using the blunt instrument of
and look, rates. I know it sounds like we're beating up on Grant Robertson in this podcast.
Oh, no, it's got nothing to. It's around the world. It's like 100% the same, right? And would it be any different under national? Probably not.
No, exactly. But Robertson did come out and say, "Hey, we think that the central bank should sort of take into consideration property, house prices." And in fairness to Ori, came out straight away and said that's not the domain of that's not our remit. But the fact that that's the sort of level of creep that really highlights that point. And this is where we sit now.
Awesome. Well, that was a really, really enjoyable chat. Thanks, guys, very much for doing that with me this morning and for continuing our discussion that we started from the News of the Money World episode. So just a reminder to everybody, of course, that none of what we talk about is or should ever be considered financial advice. We're not going to make that mistake of abusing our positions of authority, hopefully, and recommending something that you probably should do some due diligence on. Again, thanks very much, guys. So I'll do the introductions right at the very end. We have Mark Fowler, Head of Investments with Hobson Wealth. We have Rupert Carlyon, founder of Koura KiwiSaver. So thank you very much, both of you, for joining me today.
Thanks, Darcy.
Cheers. Thanks,
Great
Darcy.
chat.
It's great.